So I definitely feel like crying with the Dow being down 800 points and the S&P 500 being down 100 points. Definitely puts me in a bad mood today. All of my stocks, all of my holdings, all of my positions are in red except for AT&T, which is like just up 4%. But you know, when I think of it, 800 points sounds like a lot, of course, but it's only 3% of the index. So that means not all the stocks drop the same way. You've got some stocks that drop 10%. You got some individual stocks that went up 1 or 2%. So yeah, you've got some individual stocks that dropped 10% today. Facebook, I think, dropped 5%. So if you look at the percent-wise, it's not that bad. But definitely if you look at the points, it's a lot. So definitely what I'm not going to do is panic and sell. I'm not going to sell. The fact that the Dow dropped 800 points means that there's more people selling than there are buying. So that's what's creating the sell-off. Supply and demand. So there's more supply than demand. So if I sell, I'm just participating with the sell-off. And if you want to make money on the stock market, you have to do the opposite of what most people are doing, the opposite of the majority. So if the majority is selling, you don't want to participate and sell also, because that's just going to keep dropping the prices. So you want to do the opposite, which is buy. Obviously, you know, your purchase is not going to make a difference. So your purchase is not going to make the stock market go up. But just as a general rule, you want to do the opposite of what everyone else is doing. So definitely buying right now, the best thing to do is to buy, not to panic and sell. But the issue is to have money, to have liquidity, to be able to buy. And also the thing is, you don't know what's the lowest point. So you never know what the lowest point is, but you can come close. What I'm going to do is buy individual stocks. I'm not going to buy the index, because if you just look at the index, it only dropped 3%. But there are some stocks that dropped 10%, so there's a better chance that I can make a better capital gain when they go back up. So I'm going to buy stocks that dropped at least 10%. And I'm going to make sure I buy stocks that pay dividends, because if I don't buy at the right price, I'm stuck holding the stock for a longer time. So I want to make sure that I'm getting something while I'm holding onto those stocks, like dividends. So I'm lucky that most of my stocks, even though they're all in the red, at least I'm getting dividends from them. So I'm going to first of all, I need to find money. Then I'm going to buy either the same stocks I have, and if it's the same stocks I have, I'm going to make sure there's at least 10% difference between the first time I bought them and the next time I buy them. So a 10% gap between every purchase, so that I can average down by 5% every time at least. Make sure I'm buying stocks that pay dividends. Today I bought DFN, Dividend 15 Split Corp. Right now it's paying about 15% dividend. Hopefully they don't change the amount of dividends that they're paying, which is 10 cents per share. So if they stick to their 10 cents per share, I'd be getting 15% dividends per year. So I bought it at $8, and I think today it dropped all the way down to $7.50, which is not so bad. But it was trading at $10 like 2 weeks ago, or even a week ago it was trading at $10. So $8 is a 20% discount. So I'm happy with $8. You know, it makes me second guess my strategy, whether it's best to, like, this whole fluctuation gives me a headache, whether it's just best to buy stocks that pay dividends and just hold on to them forever and not care about the capital gain. But at the same time, I know I'm not going to be happy with just 4% dividend per year or 10% dividends per year. So I'm not sure what I'm going to do yet, but for sure I'm going to continue to buy dividend paying stocks at a discount. And what is a discount? Well, first of all, it has to be near a 52-week low just by looking at the chart. It has to be able to it has to have growth potential in terms of the future. It has to have growth potential, whether upcoming projects, whether it continues to, if you look at the past 4 years, has the revenue been growing consistently? Has profit been growing consistently? So I look at these things. I look at debt also, current assets versus current debt. Compare that. Also look at the growth for the past 4 years. Has that been increasing faster than their current assets? So all these little things. I look at analyst reports also. That I acknowledge that I'm not an expert. So by looking at expert reports, if everything is aligned, if a lot of people are saying the same thing, and if I feel the same way, then that's going to confirm my decision. But definitely right now, what not to do is to panic and sell, or else you're just going to increase the sell-off. You want to do the opposite of what everyone else is doing. So what I'm going to do right now is I want to buy more Facebook right now. It's at 151. I bought it at 168 initially. So right now it's at a 10% difference between the first time I bought it. But unfortunately, Facebook doesn't pay dividends. But I can make an exception for Facebook because it's a great stock. There's definitely a lot of capital gain potential in Facebook. People are always on Facebook. They never get off Facebook and Instagram, and they continue to make crazy revenue with ads. And there's more and more people advertising on Facebook, and the ad rates are just getting higher and higher. Yes, they're going through issues with the data privacy and things like that, but it's just a small obstacle. It's going to go away, and once it goes away, the stock is going to rebound and go back up to 200. So Facebook, although it doesn't pay dividends, I would make an exception for Facebook. What else I want to buy? I bought Honda at 29.3 today. I think I saw it at 27.8. It's not 10% yet, but if it drops, if there's a 10% gap, I'd consider buying Honda. DFN I bought already. DF.TO, which is Dividend 15 Split Corp 2. Not sure if I'm going to buy more of it. Alibaba is also a stock that I bought at 164 today. It's trading, I think it reached 138, so that's very sad. That's more than a 10% gap, but it doesn't pay any dividends, so I'm not sure if I'm going to buy more of it. It's also, it's similar to Facebook. It's got great growth potential, great capital gain potential. If you look at the revenues for the past 4 years, it's growing at a tremendous rate. So they've got good growth potential, but I just don't like the fact that they don't pay dividends, and I'm already going to buy Facebook. So I'm not sure if I'm going to buy more Alibaba shares. The thing is, I need money to buy. I wish I could buy a little bit of everything, but I need money for that. Ford is also a stock that's killing me right now. It's trading below 9, but it's paying close to 7% dividend. So I feel comfortable buying more of Ford shares, not options, shares. I'm not going to do that mistake again. I think I'm not going to buy options again, because I've got options that I bought at 150 and they're worth 68 cents now. So I bought it at $1.50 and they're worth 68 cents now. And I have to wait until January 2020 I need the stock to reach 1050 before January 2020 for me to recover my options. And I don't like that stress. So I don't think I'm going to do options anymore. I'm going to stick to stocks that pay dividends. And I don't care if they drop, at least I'm getting something whenever they go back up. Then I'll decide if I want to sell at a capital gain or just keep them and keep collecting dividends. But as long as I'm buying relatively low stocks that pay dividends, then I'll feel comfortable. And by relatively low, I mean compared to the 52-week chart, compared to competitors. Looking at revenue for the past 4 years, looking at profit for the past 4 years, looking at the ability to generate more revenue in the future. That comes from news. But the thing is, most of the time, the stock, the good news, the future projection is already represented in the price. So if you know about it, then most people know about it, and the stock is already, and the future growth is already reflected in the stock price. A good way to also know the value of the stock is to take the equity in the stock, shareholders' equity. So assets minus liabilities, you're left with shareholders' equity, and divided by the total number of outstanding shares. That should give you the book value of the stock. But most of the time, the stock is trading above that book value. But if it's somewhere close, then that's considered good. So yeah, so many buying opportunities right now. Just don't know what to buy. So many buying opportunities, but just don't have enough money to buy a little bit of everything, and just want to make sure that there's at least a 10% gap between every purchase, because I don't know what the lowest point is. And I hope people don't panic just because the index dropped 800 points, but 800 points at the end of the day represents only 3% for the Dow Jones, and I think the S&P represents about 2.5% also, or maybe even 3%. So the whole index just dropped 3%. And if you're unlucky and you have some stocks that drop 10%, then maybe buy more of that stock. So yeah, all I want to say is don't panic and don't follow the crowd. Don't do what everyone else is doing. Do the opposite, which is, if everyone's selling, since there's a sell-off right now, if everyone's selling, you want to do the opposite, which is buying, but just try your best to buy at the best price, best timing. You can never be perfect, but try to be close. Pick stocks that are sort of recession-proof, like stocks that are not affected by a recession. For example, H&R Block is a stock that's not affected by the recession because people still need to do their taxes. So it's a company that will still generate revenue even if there's a recession. It pays about 4% dividend. H&R Block actually went up today. It's one of the few stocks that went up today when everything else dropped. But definitely look for stocks that pay dividends so that while you wait for the stock to go back up, you're collecting something, and in case it continues to drop, you know, you're still collecting dividends. And the lower the stock price, the higher the dividend rate, assuming that they don't change their dividend payout. Sorry, I'm doing this video while I'm walking. I have a train to catch. That would be a good time to do this video. At the same time, you get to see downtown Montreal. And I was really upset today at work. Mostly upset because I couldn't take advantage of the drop. And ridiculous, 800 points. It's crazy. I really want to buy more Facebook shares. And I'm pissed at myself because I knew, like, that's the price I wanted to buy it initially at 150. But then when it started going back up to 170, 178, and then it dropped again to 160, and to 168, I'm like, okay, you know what? I'll just buy it this time. I don't want to miss out. I don't want to miss out on this stock. And now look at it at 150. So I'm disappointed I didn't stick to the price that I wanted to buy it at initially. But whatever. Tesla, same thing. I wanted to buy it at 250, but didn't have the available cash for it. Right now, I think today, it's at 256 or 260. Also one of the few stocks that went up instead of going down. It's funny, like, how do people decide which stocks go up and which stocks go down when everything else is going down? Gold went up today, so usually when the whole market is down, people think gold is a safe investment, but I don't care for gold. I don't think it's a good investment. But definitely if gold is going up, that means people think that there's a recession coming. So yeah, let me know what you think in the comments below. Which stocks you're going to buy. Hopefully no one is selling anything. And if you think it's a crash or just a slight correction. I think it's a slight correction. So let me know what you think in the comments below. And like always, if you're gonna open an account with Questrade to trade on the stock market, use my referral code in the description below the video. So you can get between $25 and $250 depending on your initial deposit. All right, thanks for watching.